What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. As always, today is September 29th, Wednesday. And as you guys do see from the indices chart, we did have a bounce back today. If you follow me on Twitter specifically, last night around 11 o'clock at night when I was updating my last video, I did post a picture of the flow essentially for unusual whales, showing you guys that in the last hour of trading, there were these huge calls that came in for SPY specifically. And I would let you guys know tomorrow should be a good bounce day based on the last hour of flow, right? So always keep in mind, guys, you can always hit me up on Twitter and IG for other stock updates, as I always try to keep people as much or updated as much as possible, or as much as I possibly can, right? Again, day by days it varies, but in either case, excuse me, I did want to bring you guys another play today because, again, as I did state in yesterday's video, when the market wants to give you bullshit or all this chop and you don't want to be an active participant, or you're too worried about putting your money somewhere and then it taking a dive off a cliff, you just got to switch your mindset a little bit, right? And instead of playing short term, you got to switch your mindset to long term. You got to look out further and target a goal out in the future, right? Specifically by diversifying your portfolio. Simply put, don't put all your money in one section. Don't put your money on one section of the market. You know, try to get a little piece of every piece or the pie, right? To diversify and to better grow your money or give you better opportunities to grow, right? Specifically today, I'm bringing you guys a company by the name of Affirm Holdings Inc., ticker AFRM. This company officially started trading in 2021, January 27, 2021, specifically the day essentially AMC and GME ran up essentially before Robinhood and Citadel came up with their bullshit, which I'm not even going to get into that. You guys know my position on AMC. You guys understand how I feel about it. And you guys know what I think about Ken Griffin. He's a piece of shit. For those of you that don't know, now you know. But essentially, this company, as you can see, did skyrocket on, because they had a lot of hype for its IPO. I remember it was supposed to be like in the 60s or the 50s. Ended up running up to the 140s and then falling off this cliff with the NASDAQ correction that happened in February and March, essentially. You see that the low was 46.50. For those of you that did buy in at this 46.50 and held it with diamond hands like true champs, congratulations, shout out to you, because you have been very profitable over the last couple of months. Specifically, as you see, it did recently run up to the 130s, and that was primarily because of this partnership that was announced with Amazon that you see here with this NBC logo. If it populate, it says Amazon partners with Affirm for first buy now pay later option, right? And that was on August 27th. Literally the very next day it gapped up to 90, essentially going from 70 to 90. So that was a $20 spike, just like that, right? Again, it's all about being patient, guys. This is a key example of what I try to tell you guys about controlling your emotions. Just because a company runs down or falls down because of a correction, because of a market-wide correction, doesn't mean you panic sell, right? For those of you that held like true champs and you held all the way through this point, you were rewarded with a $20 spike literally overnight. Made some money quickly. If you took profits, congratulations. As you have seen, we have had a little bit of a correction here in the last couple of days, last 4 days, coming down to this area support at 110.81, where it currently resides now. Taking a look at our indicators, right? Let's take a look at RSI. You see we're literally sitting right above neutral at 56. The orange line has converged, essentially now starting a selling period. And our ATR has a $9.86 swing on it. Again, that doesn't indicate up or down. It's just telling you the probability of the swing potential. So keep that in the back of your mind. This does have the potential to swing pretty big if it chooses to go up to the upside, right? Also, I want you to pay attention to one important thing. It got up to 146.90 back here. You see these low gray bars? That's low volume. It's not dramatic volume that you would say, compared to most recently here in the last, let's say, month. Look at these huge gray bars of volume. That increase has a lot to do with this Amazon partnership, and I'll get into that in a minute. As you guys can see, well, where am I? From the fundamentals play, it does give a brief description. Essentially, Affirm Holding provides a platform for digital and mobile commerce through its technology-driven payments network and partnership with originating bank. It enables consumers to pay for purchases over time through its platform. The consumer selects their repayment option. Loans are funded and issued by its originating bank partner. Its platform includes 3 elements: point of sale payment solutions, merchant commerce solutions, and consumer focused applications. They do have a website, which I did go ahead and take the liberty of looking up. And as you guys see, they have partnerships with some huge companies: Walmart, Amazon. You got Peloton, which has been pretty popular at the start of the year. Not most recent, but it is popular. Some mattress companies, GOAT. If you're a sneakerhead like I am, GOAT. They do have a partnership with StockX as well. If you're looking for a new bed, Nectar. If you're looking for a vacation, Priceline. As you see, they got a little piece of everything, right? They're diversified. They give you many options, which means that even though recently they did miss on earnings, as you see this minus 0.48. Potentially that is going to change dramatically with this new Amazon partnership and all these other merchants as you see here, because again, it does give you the opportunity for people who maybe don't have as much money to make very large purchases now, or have the potential to now be able to make the purchases they want and pay them off over time. Again, in sales, it's all about getting the sale. It doesn't matter how you get it, it's just about getting it, right? And this obviously is going to open a lot more sales for a lot more merchants, but as well as going to give them the opportunity to build on that by providing consumers solutions to make those purchases they want to make. They do have an investors page. There is a video. It's on the long side. It's essentially 11 minutes long. I'm not going to play it, as the goal is to try to keep my videos short and effective. So I'm going to give you a quick rundown of some of the things that I looked at before it made me convicted enough to want to open a long position in this play. Going to Wall Street Journal is one of the main, essentially, websites I go for ratings. So looking at the 3 months ago, they were giving a 7 rating buy, 4 hold, 1 sell. A month ago, that did change. It went from 7 to 5, 1 overweight, 4 hold, 1 sell. Current, we went back up to 6 buy, 4 hold, and 1 sell. Essentially, I count the 4 hold and the 6 buy as 1. That, to me, in my opinion, is a 10. To be honest, to be frank, right? If you're holding it and you already have it, you're essentially buying it. So to me, that's the same thing. There's no difference there. As you see from the ratings down here of potential targets, you see the high is 150, the low being 65. Well, we just recently came from the 60s, so I don't see us going back there now with the partnership with Amazon. So essentially, that's out of the question. So now you're really essentially considering the 150 or the 119. We're sitting at 112. 119, sure, that has potential. But in my reality, and looking at this play and all the potential that it has, it's really 150, in my opinion, right? Taking a look at institutional ownership, what are big time buyers doing with it, right? So let's take a look. As you see in quarter one, 2.32 billion shares purchased, 0 sold. Recently in quarter two, 972 million shares purchased, 130 sold, right? That was, again, consider quarter two. What is quarter two? Quarter one runs January through March. Quarter two runs April through July. So as you see, that was in this section here where those were sold. We have not got quarter three reporting yet, so please do consider that as well. As you see, some of the bigger players, shares held. You have the big players as always: Vanguard, BlackRock, Morgan Stanley, T. Rowe Price. There are a lot of big players, right? I did also take a look at the short position, just to be specific, because I wanted to see if it maybe had potential to become a meme play, but it's now nowhere near that, and I'll show you why. 8.6 million shares short. Current is 8.4 million shares short. Looking at who's holding the short, there was no surprise here. Citadel with Kenny G and his degenerate gang, as always, are participants in a short position against this. I went to see exactly how big that short position would be. Looked up Affirm on Lucid Tracking. Shout out to them. As you see, they are ranked number 60 with 9.3 million shares short, essentially equivalent to $140 million. So that kind of gives you a good layout of the land of where it stands from institutions, from shorts, and from potential, right? Looking at the website. Lastly, using my favorite tool of always, Unusual Whales, I wanted to show you guys, if you are a member of Unusual Whales, you did receive some alerts, specifically on today's date at 12:09. You did get an alert for essentially a bullish call with potential to be a runner. That's what the running emoji is. It's a runner play. For the 121, yes, 2 days ago, Monday, you did get another alert for a 135 call. The 24th, Friday, you got 2 alerts, specifically one for the 160 call and one for the 135 call. So, right? So, looking at the breakdown specifically of Affirm, we'll take a look at the flow. As you guys do see, currently I have it filtered for 50,000 premium or more, dating the range of the month of September. As you guys do see, 69,000 on a call. You have 61,000 on a call, 61,000, 77,000, 74,000, 71, 61. Again, you see the amounts. It's significant. 635,000 on a put here. The amounts aren't small. It's pretty big money. Total equaling $50 million on call premium compared to $20.8 million of put premium. So again, it gives you the indication it's more bullish than bearish. So taking a look at the pie charts, look at all these green pie charts, majority green, which means money is what that should tell you right there. Looking at the expiration breakdown, you see October 1st has more calls than puts. The October 15th, which is the monthly, has more calls than puts. And the November 19th, which I believe is also a monthly, has more calls than puts, specifically sitting at essentially $598 million currently. Looking at the specific strikes that are being targeted, you did see the alerts just now, but I would mainly focus on the 80 or the 120 being the two most popular, right, with the most amount of money. One with 303 million, the other one sitting at 482 million. So again, to me, this is a long-term play, meaning you would put your money in, hold it for a couple years, and just enjoy the ride up. That's essentially how that works. It means you go through all the dips, the dives, the highs, all of it. And this is, again, turning into a long-term play. If you want to look at it from the other perspective, essentially play it short-term, you do have the option to play options specifically. As I have told you guys in previous videos, I am a buyer essentially of anything with a delta of 0.50 or more. As you see here for the October 1st, which did just previously have multiple alerts, I would be a player essentially at the 114. Essentially, you would be able to pick this contract up anywhere from 260 to 290. Probably say 270. You'll probably get accepted and enjoy $52 gain for every single dollar that Affirm does go up. Specifically, if you're wanting a little bit more time, I did take a look at these Januaries that looked very juicy. What was it? This one right here. Yeah, the 120 strike here for January 2022, going for 1590 through 1610. The ask and bid, and joining a 53 or 0.53 delta, essentially giving yourself a 53% chance of becoming profitable or earning $53 for every $1 that Affirm does go up. But anyways, I think you guys get the point. This is just, again, another idea for you guys that want to consider not playing short-term and playing more long-term plays. This is definitely one I would consider. Again, the Amazon partnership is going to be huge for earnings potential moving forward, as well as all the other merchants that it already does business with. But again, as always, if you have questions or comments, leave them down below. I appreciate any of the likes and subscriptions as always, and I will catch you guys in the next one.